You're tuned in to Agriculture Today, and we start our Friday show with the grain market update from K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, starting off with a really simple question, possibly, but probably has quite a few answers. Where are we at right now in the grain market?
Well, we are about on April the 24th and 25th. And that means we're not May 1, we're not May 15th, we're not June 1st. Other dates of note with regard to typical planting progress. Uh, Being in late April has implications in the wheat market and hard red winter wheat. Again, we're just about to May. We're not out of the woods by any stretch with regard to freezes and all sorts of maladies that can happen. We're by us being at this point, we're seeing more harvest of soybeans in South America. That'll be coming as hard competition against the U.S. We're in not too long we'll see the second corn crop come into play down there. So where are we at? We're uh, in a moderately sideways to I guess I don't know. I hesitate to say we're low prices. We're sure not as high as we thought as many either thought that we would be or hoped we would be, but we're again, I think I know I overused this word, but seasonally we're on the brink of some really important times just coming up, and in fact we're at a time when uh, the next speaker on your program that will follow, I think it's Chip Redmond, isn't it, from Kansas State? What he will say about weather prospects will carry more weight than anything I will say, because I'll be saying, well, we need to listen what Chip's talking about, because the weather that'll be happening in the next 30, 60, 90 days will tell the story. So anyway, we'll watch where things are at. But when you ask where we're at, well, we're May corn closed yesterday at 477 and a quarter, and that's the lead contract. And again, take note that we're running out of days in April, just about ready to enter into delivery. So we're going to shift our attention here just pretty quick over to the July contract once we get to May 1. And the new crop D's contract closed yesterday at 456 and a quarter. That's right. Yeah, and a half. And that's a so-so situation. We're a little above 450, which means we really don't know exactly what's going on. Again, a lot of uncertainty still out in front of us, but we're at 450 or over, and that number still represents uh, uh, not as bad of a price as you might expect given what the USDA had projected for corn acres in 95.3 million acres. Uh, and uh, we have that much optimism out there. In the last day or so, we've had some optimism, some upward movement in the soybean market. Probably of the three uh, major markets that we're watching: the corn market, the hard red winter wheat market, soybeans in particular, and we watch others too. We watch cotton, watch sorghum, and sunflower, you name it. But those are the main futures complex numbers that we're looking at. And the strongest in the last couple of weeks actually has been soybeans. And so soybeans closed yesterday. Again, the lead contract at 1053, and the new crop November 25 at 1035. Again, okay bids. It's not 9, it's not 8, but it's not 12 and a half or 13 either. So everything is really out in front of us. And I would say it's not even the weather that, especially for soybeans, we're not as concerned about the upfront weather. We haven't started soybean planting so much. If anything, what being planted now for fall harvested crops will be corn, followed by sorghum and then some beans later on, at least from a Kansas perspective. But so anyway, but the weather later in the summer will tell the tale on beans. And we'll get off into August thereabouts. So again, what the climatologists tell us about their expectations as we move into May and then July and then August will tell as much or more as than what we have right now. And then for wheat, of course, we have impending wheat uh, serious wheat development, harvest following not that long after that. Here in late July, we mentioned this at the start. We're with the, pardon me, in latter part of April, we're coming now into May, into June. We'll be looking at the prospects for wheat development. Wondering if we'll be dry or wet. We catch some rain here in the short run. What will we have once we get out into the latter part of May into June and into early July when and well especially May and June when we have the reproductive phases of hard red winter wheat crop in Kansas, uh, out there vulnerable to whatever weather conditions might happen. Too much or too little moisture, sunshine, heat, you name it, it's all there. We're thankful year after year for the resilience of the hard red winter wheat crop, and long-term watchers of that crop really. How many times have we relied on just tiller growth, secondary tiller growth, to overcome a malady of early sins that have happened with that crop? So anyway, we got all that happening, but uh, July 25 closed yesterday at 550 and 3/4. When you don't quite know where things are at, it's I think that's almost dead on even with the reference price for a good long time that we'd had for wheat and government programs, 550. So that's where we are, but we still have this thing going on, the situation where, yeah, July may be 550, but we have carrying charges built into uh, from July to September, from September to Dece to Dece to March, March to May 26th of 7.5. Uh, well, at least 7.5 cents, 5, 6, et cetera, month by month by month by month going out. So the wheat market right now is signaling, hey, grow this crop and store it. We're going to pay you for storage, and so you that's kind of what we're looking at. I would say that uh, we do have, in looking at cash prices, again, you can tell wheat harvest is right before us, in that the cash prices right now, in western Kansas especially, well, the highest cash prices that I could see on yesterday's closes, 463 in Colby, four well, these are on the low end, pardon me. Colby 463, 473 in Topeka and Garden City, 477 in Pittsburgh. You do see it 517 for higher prices in Hutchinson and Salina and central part of the state. So we shall see. The wheat market has been had enough negative news happen over the last 1 or 2 years without, again, outside the U.S. export competition. Uh, Actually, wheat available over in the Black Sea region coming into the U.S. in the last 1 or 2 years, at least parts of it have affected the price situation. That when there is the possibility of something positive happening, I think it's kind of discounted until it actually happens. But Russia has had crop production problems. They're diminishing their shipments in the latter part of their marketing year. So that by rights in a normal situation would impact the U.S. wheat market potentially in a positive way. The value of the U.S. dollar here of late, with the economic news going back and forth as we try to decipher all that, weakening a little bit, that also would be a help. Seems that in the short run, that places like the EU, Europe has been stepping in to fill some of those gaps. But if we as we spoke, if we were speaking with Kansas wheat people, they would talk about that some points of watchful potential optimism in the wheat market, and gosh, the timing of it would be just wonderful, because we'll be coming into a time frame when we've got lots of we'll have harvest wheat prices, probably lows. It'd be a great time to ship a whole bunch of wheat, that to get it out of storage, move it out of the country, and reestablish the U.S. strength in export markets. You and I, Shelby, for a good long time, been watching price ratios, key price ratios around the state, and interesting to me that when you look right now at the soybean versus corn prices that have been going on. Really, we've got in Topeka and Salina really a positive advantage towards, well, neutral to positive for planting soybeans over corn, and that hasn't shown up for a while. And we've got still out to the west, Garden City area, man, they're going to plant corn. That's what they're good at. Plus, that's what the ratios are showing. New crop soybeans versus corn, about a 2.05 ratio. 2.3 is neutral. And also, we've had something else come about. We've got the ratio of hard red winter wheat cash prices in the Garden City area of 473 wheat, 487 corn. So that's a so you have wheat prices less than corn, and for people well, for livestock feeders that are okay with feeding wheat, there's probably a way to save some money there with that. So uh, some trends like that we're watching, and so I guess I wouldn't I would not I would not be of the type of thinker that say, woe is me, all is lost, we'll never have higher prices. Where we're sitting right now, the factors that would bring about higher prices really haven't emerged yet. And but so I guess we'll check back in 15, well, in 2 weeks, in 4 weeks, in 6 weeks, and 8 weeks to see how that story goes. But we're in the mode where right now the biggest thing that probably positive would be the weather, if it presents any problems. And oh, and one other thing, you and I have talked about the worries about U.S.-China relations, what that might do for exports. And here we hear news of late, a softening of tone between those countries, more chance to come to the table, and it probably that's at least part of the issue that's been supportive of soybean prices here of late. So we'll see how that works itself out. And so we've had strong statements about tariffs and direct challenges one way or the other, and on the upfront. But as things have worked out, these countries have come together, and it looks like in a lot of these cases we're heading for more of a moderated, negotiated outcome that's hopefully have more benefits for all parties.
Dan, I appreciate you taking the time to join us today.
Thank you, Shelby. Take care.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on agriculture today, but stick around because we have more for you up ahead.